Alright, folks, let's talk about one of the most surprising comeback stories on Wall Street this week. Rocket Companies, ticker symbol RKT. Yep, the Detroit-based mortgage giant is back in the spotlight after an impressive 4-day rally, closing Monday up over 7.5% at $15.04. That's a solid bounce, considering their rocky start to 2025. So what's driving all this excitement? Investors are clearly betting on a major turnaround ahead of the company's second quarter earnings, dropping July 31st. But here's the real kicker. Despite a net loss of over $200 million last quarter, Rocket seems to be catching a second wind. Is this a dead cat bounce or a real comeback story in the making? Let's break down what's really going on. In Q1 2025, Rocket Companies reported a net loss of $212 million. That's a big reversal from the $291 million profit they posted a year earlier. Total revenues also took a 25% hit, coming in at $1.037 billion. Not exactly the kind of numbers that make Wall Street cheer. Yet, here we are, with RKT stock surging. Why? The company's Q2 guidance suggests a bit more optimism. Rocket is projecting revenues between $1.175 billion and $1.325 billion for the quarter, which could signal a bottoming out of the downturn. Investors are looking past the short-term pain and focusing on the potential for stability. One major reason for the renewed bullish sentiment: Rocket's bold M&A strategy. In recent months, the company has racked up two major acquisitions, Redfin Corp and Mr. Cooper Group Inc. These aren't just big names, they're powerful additions to Rocket's ecosystem. Redfin brings in real estate tech capabilities, while Mr. Cooper boosts Rocket's mortgage servicing firepower. Together, these moves could lead to serious operational synergies and expanded customer reach. By adding these assets, Rocket is aiming to become more than just a mortgage lender. It's positioning itself as a full-stack real estate and financial services platform. That kind of scale-up could be a game-changer for future growth. Now, let's pump the brakes a little. Not everyone's convinced that Rocket's rebound is the real deal. Analysts are split. Some see this as a short-term pop that might fade if the Q2 results don't deliver. Others argue that Rocket's long-term prospects are improving thanks to its strong tech backbone and diversified revenue streams. The macro picture still matters a lot, with interest rates moving unpredictably and lending conditions tight. Rocket needs to prove it can generate consistent earnings even in a choppy environment. The earnings call on July 31st at 4:30 p.m. Eastern Time will be key. That's when we'll hear more about how these acquisitions are being integrated and whether Rocket's forward guidance supports the current hype. So, is RKT stock a buy right now? That depends on your risk appetite and time horizon. The recent momentum is hard to ignore, and if the Q2 numbers show improvement, we could see more upside. But if revenues miss, or integration costs from the acquisitions weigh heavier than expected, this rally might lose steam. Bottom line, Rocket Companies is at a crossroads, and for investors, both retail and institutional, it's a stock to keep a very close eye on. We'll be watching the July 31st earnings like a hawk, and you should too. For more in-depth breakdowns like this, exclusive startup coverage, and insights from the business world, make sure you're subscribed to startupnews.fyi. Catch you in the next one.